You're watching the NWR Virtual Investor Conference, May 2020. We've got Triton Minerals up next. Triton is focused on developing its world-class projects in Mozambique for the graphite revolution. It is ideally placed to utilise its first mover advantage in one of the fastest developing markets globally. Through its Ancuabe Graphite Project, Triton aims to be the next East African Graphite Producer, targeting production of 60,000 tonnes of high purity, large flake graphite concentrate per annum. Peter Canterbury joins us today. He is Triton's Managing Director. Peter has substantial experience in leading ASX-listed mining companies, most recently as CEO of ASX-listed Bauxite Resources. Prior to this, Peter was CFO of Shandong Resources for 6 years. He also played a lead role in negotiating the Mining and Development Convention for Sundance in Cameroon for its $5 billion iron ore mine, rail and port project. Over to you, Peter.
Thank you, and thank you for NWR for the opportunity. Firstly, a disclaimer and competent person statement, which is a requirement for this presentation. Today I'll start initially by just giving a bit of a background on graphite and why it's critical and what's important and drives value. For us, our assessment is that there's three areas which you need to concentrate. Flake size, it's important for expandable graphite and refractories business, with China having a shortage of large flake graphite. Grade, and a lot of concentration happens on grade in the battery market, where you need 99.95 or 99.995 requirement. Expandable graphite only needs around 94 to 98, and same with refractory. Fortunately for us, Triton has very high levels of both in both flake size and grade. An area which people don't really concentrate on, what's important because it's an industrial mineral, is really the density and impurities. We are one of the most dense graphites, about 660 kilos per cubic metre, and virtually no clays, microclays, which is really important for processing. So the markets really drive value depending on what your target market. A lot of focus at the moment on battery, which is the largest market, but is all driven by grade. And most people have to do chemical purification, but it's more important the closer you get to the 99.95 through natural flotation, the better it is. It's not a target market for us, but we do have very good grade anyway. Refractory needs a medium-sized flake in 98 to 99% grade. It's one of our target markets, and we can make that reasonably easy. And the expandable graphite is really important area, which requires large flake and 94 to 98%. It is our primary market, and if you have a look across there, you'll see why, because the flake size really drives value. Jumbo flakes at least 3 times the price of what finer flake material is, and that's why our concentration is on Ancuabe, and why we're very confident this is a very robust project going forward. Anyway, the whole market is a graphite market. Whilst it has probably been surplus for a little bit with the startup of Syrah, long-term structurally, it's expected to grow in the next 8 years about close to 25% per annum. And even if all projects are brought online by 2028, there's going to be a significant shortage of graphite production around the world. There's many estimates on there, but that there's very consistent view is that graphite is going to be a short term, in the near term, will become very short, and that's why it's critical to get graphite projects moving in the next few years. What drives a lot of the demand is China. They are running through environmental issues and a One Belt, One Road initiative, which will see significant infrastructure built, significant environmental requirements, which will impact both demand for graphite and also supply. Just a really important part, and it's on the next slide, the quote is that, China is estimating that expandable graphite will be about 2 million tonnes in the longer term required per year, which is more than the actual, twice more than the actual production of natural flake graphite was last year. We have really positioned ourselves well for a large flake production at Ancuabe. We've done extensive test work on its suitability for the expandable graphite market, being foil and flame retardants. You'll see a couple of pictures there of the applications of it, and it's a very interesting product going long term. Only 10% of the world's graphite supply is suitable for expandable graphite market, whereas Ancuabe, it's 50 to 60% is suitable for expandable graphite production. We are targeting this because of the shortage, which we believe is coming very shortly, and we have great confidence in it, especially seeing we have another graphite producer right next to us who is at Ancuabe, who is producing that material right now. It is really the third largest, expandable graphite is really the third largest graphite use, but it will be growing. And there you'll see the quote from China, where it is a significant growth estimates coming forward through environmental changes. Ancuabe is a world-class asset. It is long life through our DFS. It has a 30-year mine life, probably closer if you increase the resources into reserves of probably 50 years at 60 to 100,000 tonnes. So it's a significant long life project. Near-term production, aiming to be in production at the end of 2021. Through our relationship and a strategic partnership with Jinan Hi-Tech, we have a clear path to funding, which we'll go through a little bit later. And we're in a market that is transforming in the long term. Advantage for us is we are fully permitted. We have a mining concession granted, environmental license, and ready to construct. We have offtake secured for over 50% on binding contracts. We could sell the rest today, but we've decided to lead it into the marketplace because we anticipate it will strengthen dramatically. And EPC contract is signed with MCC International, and that has attached concessional financing availability. Mozambique, it's a great place to operate. I've operated in a number of jurisdictions through Africa, and I'm very happy to be where we are. Cabo Delgado is in the northern part of Mozambique. Very much activity going there. Sira is located there, but a lot further inland. We have Exxon and Anadarko, or now Total, with $50 billion of gas projects sitting up in the Cabo Delgado province. GK, which is running a 6,000 to 8,000 tonne per annum operation for its own use. And GK is Germany's largest graphite producer, and the reason it produces at Ancuabe is because of the quality and flake size. And we also have South 32 with Mozal Aluminium Smelter, Vale with Motis also operating in Mozambique. So we have a developed infrastructure, good mining industry, mining code, there, supported government. So we're very happy where we are. The advantage for Ancuabe, like I said before, was it sits right next door to the GK plant. So it's there's good history in terms of the quality of the Ancuabe deposit, and it's being currently used into the market for GK in Germany. We're only 80 kilometres from the port of Pemba. It's a container port, which with plenty of capacity, and a sealed road all the way there. So we're the closest project of all the East African graphite projects to a port. For us, that supports us going into production early at 60,000 tonne high purity large flake graphite. The design of the project is quite simple. It's a normal concentration process coming from the existing mine. 3 stages of crushing, goes to a rod mill for grinding, 3 to 4 stages of flotation, and then 3 to 4 stages of cleaning, filtration, drying, bagging. We have across the fence PV system designed, and we're in talks with groups about having more hybrid capacity over the fence, which will lower capital costs and also operating costs longer term. At Nicanda Hill, a very important project for us is it is the world's largest graphite and vanadium deposit. It sits very close to where Syria is. It's a resource of 1.4 billion tonnes at 11% TGC. Fine material, but also has 4.2 million tonne of contained V2O5 at about 0.29%. It is a very large project suitable for the battery market, and it's something for long term really important for us. We are going to seek long-term JV partner and finance. And importantly, our strategic partner has reinforced that also to them that this is an important project and supports our development assessment of that is a long-term, large partner project with a lot of value going forward. The Jinan Hi-Tech strategic partnership and funding is Jinan Hi-Tech is a state-owned enterprise. It's provincial Shandong province. Its investment was $19.6 million, $8.5 million into us, and $11 million to buy the Shandong Tian mining shares. But an important part of that is the financing support of the Ancuabe project with the debt package, which we expect to finalise or targeting to finalise by the end of June at concessional interest rates. And we're talking about LIBOR plus 350 basis points, so sub 5% financing. Ownership, we have Jinan Hi-Tech at 34%, and SG Hiscock around about 5%. We 1.134 billion shares on issue, and 204 million options, which 10 cents, which expire in September. I know there's a bit of interest on what we're planning to do with that. We will address that over the coming months, but it's very difficult to change any terms of options, but we want to look at ways where we could potentially reward our loyal shareholders. So for Triton, highlights for us is that we have at Ancuabe, we have near-term production with a high margin nearly 300 million NPV, IRR of 37%, fully permitted mining concession, binding offtake, EPC contract signed, a very clear path to finalise funding, and just for that we are targeting financing being finalised by the end of June, and targeting construction commencing in the third quarter. And Jinan Hi-Tech are very supportive of those timelines. We have 3 world-class assets: Ancuabe, Nicanda Hill, and Nicanda West, which is like Ancuabe but at a very early stage. We're in a stable jurisdiction, and one of the pleasing things is we currently are in business as normal operation because of China has come back to work. We are in discussions on the financing and trying to initiate the EPC contract to get people on the ground in the third quarter. So for us, it is really, we are in the right commodity, and our assets are very, very attractive assets, and we're in a tier 1 location for graphite. It is a critical mineral going forward, key component of lithium-ion batteries, but also of the flame retardant industry. And excellent returns, world-class assets, and long life assets, which I think is very, very attractive for Triton shareholders. For us, Mozambique is the premier location for graphite. It's got 2 operating mines there currently, and adjacent to our assets, with a supportive government infrastructure there, and we've got a container port suitable for our product, very close to our operations. So from an investment proposition, what for us the takeaways is, great assets, near-term production. We're talking, late 2021 startup of Ancuabe, which is targeted. Very clear offtake secured through binding contracts, clear path to funding, and in a market that really is got long-term structural shortages looming, with high growth rates for both the EV and the flame retardant building material sectors. With that, I'll close and take any questions that people have.
Thank you, Peter, for your presentation. Your investors have asked questions as you've been speaking. David wants to know, will the company require any capital from existing shareholders this financial year?
No, we're not anticipating any capital raisings required to go into the construction phase. We're finalising the debt financing, well funded, and no anticipation of coming to the equity market.
Right, thank you. And is the graphite mined suitable for graphene technology?
Yes, it is. It's not something we concentrate on. I mean, graphene is really single flakes of flake graphite and layers, and so our product is suitable for graphene, but the demand and cost requirements of that are so significant, and the market is so small, that it's not something that we focus on, even though our strategic partner Jinan Hi-Tech are quite interested in the area of graphene as well, and we will look at it. But the volumes globally are very low, and don't justify the investment in a mine.
Mm-hmm. Peter, can we have an indication of first-year production statistics at this stage?
Yeah, so first, it's a fairly quick ramp up, and we're expecting between 40 to 48,000 first year of production, and second year at full capacity at 60,000.
Mm-hmm. After having, another question from an investor that's come through just then, after having bank finance pre-approved, is it fair to option holders to postpone the starting date? Will there be further dilution involved in the final finance package? So
in terms of the delay of the, I think it must be referring to the options. It's not possible to change the dates of options or any terms of the option packages, but we'll look at ways where we can potentially, reward loyal shareholders going forward, subject to board and shareholder approval. And the second part of that question was?
Will there be further dilution involved in the final finance package for shareholders?
We're not anticipating coming back into the equity market at this stage.
Thank you, Peter, for joining us today. That was a great recap of what's going on with Triton Minerals.
Pleasure. Thank you very much for your time.
Thank you. And thank you everyone for staying on the call. We'll be back soon with Paragon Funds Management. Paragon you will be familiar with. They are an Australian long-short fund manager, passionate about investing, aren't we all on this call? They're currently dedicated to one fund, which is the Paragon Australian Long Short Fund. They'll be up in about 5 minutes' time. See you soon.